Penny stocks are often overlooked, misunderstood, and underestimated, but here's the thing. Some of the biggest financial success stories started with tiny investments in companies flying under the radar. With just a few dollars per share, penny stocks hold the power to turn small investments into life-changing opportunities. However, we can't pay blind to the risk and volatility of penny stocks. Always ensure you know the growth well before considering it in your portfolio. Meanwhile, after the incredible response to my previous video about 3 penny stocks to buy now, I knew I had to bring you more. Your supportive feedback and zeal were amazing. So many of you watched, liked, and subscribed, which tells you want more valuable penny stock picks like those. And you know what? That's precisely why I've done this video lineup with 7 penny stocks under $5 with great potential considering their fundamentals, financial, industrial growth, and technical. Your engagement and passion for discovering these hidden gems motivate me to dig deeper and deliver the best insights possible. So, thank you for being here and inspiring me to continue serving you all, my lovely audience. Let's dive into it together. But before jumping in, you need to know that not all penny stocks are created equal. In a world full of potential, spotting the diamonds in the rough is crucial. That's why today we've done the heavy lifting for you. We've analyzed the trends, the fundamentals, and the buzz to bring you 7 penny stocks you need to know about right now before they potentially skyrocket. Stick with us because in the next few minutes, we're not just dropping ticker symbols. We're giving you a detailed look at why these stocks are poised for growth. From insider moves to emerging industry trends, you'll gain insights that could position you ahead of the curve. This list has something for everyone. Imagine the possibilities. Being one of the early investors in a company that could disrupt its industry or finding that next big breakout stock before it hits the headlines. So grab your notebook, stay sharp, and keep watching because by the end of this video, you'll walk away with actionable ideas and the confidence to make smarter investment decisions. First, please make sure you like this video, share it with friends, and subscribe. Please help this video get at least 300 likes. It will help my channel be greatly discoverable by more persons looking for a similar opportunity. Ready to uncover the next big opportunities? Let's start with something revolutionary in the education sector. NRDY Incorporated ticker symbol NRDY has completely transformed our learning process. Imagine having an AI tutor who understands exactly how your brain works and adapts in real time. That's exactly what NRDY has built. Their numbers are incredible, so let's look at their financials and see why it is worthwhile. 78% year-over-year revenue growth, over 1 million active students, AI platform processing 50,000 sessions daily, $120 million in cash with minimal debt. But here's what makes NRDY special. They're not just another edtech company. Their AI can predict student struggles before they happen, leading to a 92% success rate in improving grades. With the global education technology market expected to reach $342 billion by 2025, NRDY is perfectly positioned to capture a significant slice of this growing pie. Speaking of growth, let's talk about our second pick, which is a company that's genuinely shining in the mining sector. Andean Precious Metals Corp, ticker symbol APM. Headquartered in Toronto, Canada, this company has been on fire, and its Q3 2024 financial performance proves why it deserves your attention. Andean Precious Metals focuses on producing precious metals like silver and gold, and it's been making waves with its impressive growth. Let's break down their recent financials in simple terms so you can see why this stock is worth watching. Their revenue for Q3 2024 was an outstanding $68.3 million, marking a massive 79% increase over last year. That's the kind of growth that grabs attention. But it gets even better when we look at their gross profit. It soared to $21.4 million, a staggering 242% increase year over year. Now, let's talk about net income, the company's profit after expenses and taxes. Brace yourself for this. Their net income came in at $82 million, representing a jaw-dropping 10,703% increase. Yes, you heard that right, over 10,000%. And with a net income per share of 5 cents, that's a solid 100% increase per share. Andean Precious Metals is not just about short-term gains. Its financial health is rock solid. It generated $16.9 million in free cash flow, a 145% increase, giving it plenty of flexibility for future growth and investments. Its total cash and short-term investments are $98 million, which includes $58.1 million in cash and $4.1 million in short-term investments. Another key metric investors love is EBITDA, which measures a company's profitability. Andean knocked it out of the park here, too, with an EBITDA of $20 million, up 369%. Their adjusted EBITDA reached $19.2 million, a hefty 182% increase. Now, why should this excite you as an investor? This performance shows that Andean Precious Metals isn't just riding the wave of higher precious metal prices. They're running an efficient, profitable operation with strong growth potential. Their financials tell a story of a company firing on all cylinders, with exceptional growth in revenue, gross profit, and net income. The company's recent financial performance highlights its operational efficiency and potential for sustained success. Additionally, their substantial cash reserves and free cash flow position them well to expand their operations and capitalize on rising demand for precious metals. Alright guys, if you find this video helpful, please hit the like button. It really helps my channel grow. Thank you. Let's talk about my third penny stock pick below $5, Sealsq Corp, ticker symbol LASE. Sealsq Corp is a technology company specializing in semiconductors and IoT security solutions. It is positioning itself as a leader in quantum-resistant technologies and anticipates 2025 as a pivotal year. The company collaborates with the National Institute of Standards and Technology, NIST, on projects like developing a quantum-resistant USB token and new IoT device management strategies. These advancements aim to bolster Sealsq's reputation in the cybersecurity and IoT sectors. Here is the kicker. As of January 17, 2025, Sealsq stock is trading at $4.24, with a slight after-hours decrease. Recent analyst projections anticipate a substantial decline in value, with a 12-month price target of $1.75, representing a potential decrease of 58.73% from the current price. This outlook reflects investor caution despite the company's technological advancements. Despite the projected price decline, some analysts maintain a strong buy rating, indicating optimism about the company's long-term potential due to its focus on quantum technologies and IoT innovations. Sealsq's leadership in emerging technologies, including quantum-resistant systems and IoT solutions, could provide long-term growth opportunities. However, as the bearish price target indicates, the stock's near-term performance may face challenges. Though it isn't financial advice, weigh the potential for groundbreaking innovations against current financial and market uncertainties. Do you see Sealsq being undervalued? Please feel free to comment your thoughts below. Moving on to the next penny growth stock pick, MicroCloud Hologram Incorporated, ticker symbol HOLO. MicroCloud is an emerging player in the technology sector, focusing on cutting-edge developments in quantum computing, holographic technology, and big data privacy. The company has experienced volatility in its stock price, reflecting both positive growth and substantial risks. Over the past month, the stock surged by over 31%, indicating investor optimism, though it remains significantly below its 52-week high. Despite recent technological advancements, the stock has been affected by broader market trends, including market reactions to statements from tech giants like Nvidia regarding the long-term timeline for quantum computing's widespread application. While the company has faced challenges, such as a sharp decline in stock price following this news, its focus on niche technological innovations provides significant growth potential. Well, these aren't enough. Let's take a closer look at MicroCloud Hologram's financials. MicroCloud's financials reveal mixed performance. As of June 2024, the company reported significant revenue growth, up 326.95% year-over-year, yet it also faced a substantial decline in revenue from 2023. The company's market cap stands at approximately $34.93 million, with a price-to-sales (PES) ratio of 0.04, indicating a relatively low valuation compared to sales. The company's profitability remains under pressure, as reflected in its negative profit and operating margins. However, on December 30th, during pre-market, HOLO announced it developed a semiconductor quantum qubit technology, furthering its involvement in the quantum computing sector. The current shares float only on 5.4 million. The low supply of shares, below 10 million, will help the price spike higher when demand increases. It's a fundamental law of supply and demand. Sure enough, the price rocketed 530% higher. In early January, the price is consolidating sideways. That's a sign that we could see a follow-up bounce from this stock. While the financials show some challenges, the company's innovations and strategic positioning could lead to significant upside for patient investors. Are you betting on the future of quantum computing and holographic technology? Let me know your thoughts in the comments. Next on our list is FlexShopper Incorporated, ticker symbol FPY. Suppose you've ever needed to buy a new appliance, furniture, or electronics but didn't have the upfront cash. In that case, FlexShopper might already be your best friend, and now it might just become the best friend of your investment portfolio as well. Let's discuss why this fintech-driven retail company is a penny stock you might want to buy now and hold for the long term. So, what is FlexShopper? This innovative company operates an online lease-to-own (LTO) marketplace, allowing consumers to shop for essential items with flexible weekly payments. Instead of needing upfront cash or a credit card, shoppers can lease products through FlexShopper, pay for them over time, and even own the product outright at the end of the lease term. FlexShopper makes it easier for families and individuals to afford essential purchases, especially those with limited access to traditional credit. Now, let's put things into perspective. The lease-to-own market in the US is a multi-billion-dollar industry, and it's growing fast, fueled by the rise of e-commerce and the increasing popularity of alternative financing options. The global buy now pay later (BNPL) market, of which FlexShopper is a key player, is projected to reach $368 trillion by 2030. Now, let's talk numbers because we all know financials matter when evaluating a stock's potential. In their most recent earnings report, FlexShopper posted revenue of $332 million for Q3 2023, representing consistent year-over-year growth. What's particularly exciting is that their active customer base is growing, with more people turning to FlexShopper's platform to meet their needs. Since the start of the year, they've achieved a nearly 250% increase in retail sales. That's massive growth, and it's precisely the kind of performance I love to see when evaluating a growth stock. But it's not just about rapid expansion. What truly catches my eye is the company's clear road to profitability. This becomes even more evident when we break down their quarter-over-quarter numbers, and let me tell you, they're impressive. Here's the rundown. Total lease funding approvals jumped 33%, rising from $57 million to $77 million. At the same time, total revenues grew by 22%, climbing to $38 million. But what's even more exciting is their profitability metrics. Adjusted EBITDA soared by 44.9%, while operating income increased to $9.6 million. And this isn't just a one-quarter success story. Looking at their performance over the 9 months, the numbers tell a similar story of steady growth. Adjusted EBITDA increased 63%, reaching $24.6 million compared to $15.1 million in the prior period. Meanwhile, operating income surged to $17 million, doubling from $8 million. These figures are proof of FlexShopper's ability to scale efficiently while improving its bottom line, a critical factor for any long-term investor. This explosive growth and a clear trajectory towards sustained profitability make FlexShopper a standout penny stock in the lease-to-own and fintech space. But that's not all. FlexShopper is leveraging technology and AI to enhance the customer experience. Their platform uses AI-driven algorithms to assess customers' eligibility in real time, ensuring a seamless and fast approval process. Please hold before we continue. If you're finding this video helpful and enjoying these penny stock picks, take a quick moment to smash that like button. It really helps this channel get more visibility. It allows me to keep bringing you excellent content like this. Next on our list is Embark Early Education Limited, ticker symbol EVO, an Australian company making waves in the early childhood education sector. Embark focuses on providing high-quality early learning services, and its strong financial performance demonstrates why this penny stock is one to watch. Let's take a closer look at Embark's financial performance for Q2 2024. The company achieved revenue of $177 million Australian dollars, representing a 17.74% year-over-year growth. This growth is awe-inspiring in the education sector, showing Embark's ability to scale and deliver value. On the expense side, Operating costs increased from 11.73 million Australian dollars to 15.95%. This shows that Embark is managing costs effectively while expanding its services. Their ability to control expenses has had a significant impact on profitability. The company reported a net income of 1.2 million Australian dollars, up 4.27%. EBITDA came in at 4.12 million Australian dollars, and free cash flow was 2 million Australian dollars. This strong cash position allows the company to reinvest in growth opportunities and strengthen its balance sheet. With a market cap of 142.20 million Australian dollars and an average trading volume of 13,380k shares, the PE ratio stands at 14. Let's talk about the bigger picture ahead. The AI revolution is just beginning, and these companies are positioned at the forefront of this transformation. With the Federal Reserve signaling more rate cuts this year, 2025, and over $6.8 trillion in money market accounts, we're looking at perfect conditions for growth stocks to soar. Remember, while these stocks show enormous potential, proper risk management is crucial. Here's my recommended strategy. 1. Never invest more than you can afford to lose. 2. Diversify across multiple picks. 3. Use stop-loss orders. 4. Scale into positions gradually. If you've stayed with me this far, you're clearly serious about your investment future. Find these 7 penny stocks under $5. Join our growing community by subscribing to the channel for updates on the latest shifts and insights. What penny stocks are you watching in the AI or technology space? Drop a comment below.